is one of the most important features of being a human being. Even the ancients did cave paintings and other forms of art, and it's really important. Now, what I'm suggesting is that a lot of people have too much chatter going on. They put these in and they're stimulated, and their neurology responds to that because they're listening to sound bites and music bites all the time, and they're being overstimulated and they don't know what to think. And that's one of the things that I do. I check out of that. I do my fair listening to music and documentaries and other things, but I am a reader of books and periodicals. And it's a great way to give your mind a chance to slow down and think. So you can take these out and put them at rest and use them more for listening to documentaries and things of learning and entertainment while you're working out, while you're walking, and maybe a phone call with when you need to be hands-free. And that's, the way I do my balancing and my learning. So Mark Twain famously said, money is not the root of all evil. The lack of money is the root of all evil. So I'm not going to stand by that completely, because I think there are a lot of other things in life than money. But money is a great thing to have, especially if you're working a lot and using your creativity to produce financial results. You want to have that money in something that does well for you over time. So that's what I've come here to offer you today. I'm a coach. I do coaching on many areas. I'm a person who did not have kids and has spent his life as a scholar athlete. And I live a very balanced life. I currently have been living around the world since 2017. So 2 months here, 3 weeks in Colorado skiing, 4 months here, summer in Europe, these types of things. I've been doing that, and I'm not the only one. It's becoming a growing fad. Hemingway did this a long time ago, and many other famous writers and artists, Picasso and many more, have done this. So what I do is I take Hemingway and I eliminate the booze, I eliminate the debauchery, I eliminate having kids and getting married and having all these different types of relationships that he had with other women while he was married. Get rid of all that and concentrate on self-mastery. And that's what I've been doing for most of my life, and hopefully getting better at it. That's the goal, getting better at it with each and every year. So I have an offer for you in coaching. I do coach people on health, fitness, and wellness, on motivation, on doing the right thing, all these wonderful things, how to become an intellectual, how to become intellectually fair, how to be kind to yourself and others. All these things are part of my coaching plan. But in recent times, I've had such good fortune in the financial markets, because when they went down recently with the coronavirus, and that's just the spark that ignited the collapse of the financial markets, the short-term, I hope, collapse of the financial markets, but they were way overinflated. When people were saying, yo, Trump, we got corporate profits, we've got this, all good tidings, my stocks are going up, my income's going up. Yeah, they may have thought that, but if you look at the history of just take a look at the interest rates over the last 10 years up until today in 2020, you'll see that the interest rates kept going lower and lower, and there was money being dumped into the economy by the government. And who controls the government? Very wealthy people, people we don't even see their names of sometimes. And these people are pumping money into the economy to the trillions of dollars. And the public relations firms and the mass media and a lot of other people are picking up on this and saying, hey, financial tidings are good. The economy is stimulated. America's back on track, all these types of things. I disagree with that. I think that the low interest rates and the signs on the wall that and the high debt are all indications of the economy not being strong, and them having to be propped up and pumped up by fictitious initiation of money in the form of low interest rates and printing money and many other things too complicated to go into right now. So I saw that coming. And I just knew that we needed a spark. The real estate market is so high, the financial markets are so high, and bond interest rates are so low. How are the seniors going to, people in the retirement years, going to get income to live off of if the annuities and the bonds on the fixed side are paying 1 or 2%? They're not going to be able to do it. So something's got to change, right? Something's got to change. So I had my assets in a widely diversified portfolio, including life insurance, cash values, stocks, and mutual funds. And about 14 months ago, and now here we are in mid-March, late March 2020, I started putting my money out, taking it out of the stock market and putting it more into short-term bonds and even some in the money market. Was I alone in doing that? No. Lots of wealthy people had been doing that. If you look at Warren Buffett's portfolio over the last few years, more into cash than is typically in his cash positions, more than 1/3 that we know of, that we can see in cash positions in his various personal and group run investment portfolios. So why is that? Is he just waiting for an opportunity? I don't think so. I think he's a smart enough guy to know that the markets were overinflated and a correction had to come. He'd like to be liquid at that time, so then he can seize the opportunity and buy in at a low time. So there's geopolitics, which is very important. There's knowing how the big players work, very important. There's knowing interest rates. There's knowing reality checks. I mean, I still have conversations even this week in the end of week 2 of the current financial stock market collapse of 2020 due to, they say, the coronavirus and people being out of work. Now, it just needed a spark. The market, in my opinion, was going to correct somewhat substantially. It just needed a spark. So I'm still talking to people on the phone that don't get it. I tell them that with just some discretionary assets of about $120,000, not all of that at once. My goal with this trading that I've done in the short term here is to keep half in cash, money market, and half in investable assets, where I'm doing some trading in instruments that do well when the market goes down, even 3 times of what the inverse is. So take the market going down, if it goes down 20, 3 times that would be up 60 for me. And I did that so that in day 1 of the coronavirus financial market downfall, I made with 120,000, not all invested either, I made 100,000. In day 2, taking some of that off the table, which the good gamblers will tell you to do, take some of your money off the table and put that aside, I was able to make 40,000. And then some days of ups and downs, and then today a down. Yesterday was up, today is down, but I'm still up over $150,000 on 120,000 in a very short time. So it's not a lot of money, but it shows you what you can do with small portions of your money. And if you have a lot of money and you just want to take 10% or 20% of it and protect it in a way when the market is collapsing, this is something that you can consider doing. So I'm offering coaching, and I have prices that will be listed in connection with this video that will show you what it would take to sign on and to receive emails and updates to a certain degree for an initial fee that I'll charge you. And you can pay that fee and hear what I'm thinking, read what I'm writing, and get some individual and some group coaching via webinars, etc., from me. And I hope this will help you, because my goal is to bring you health and wellness in your life and your fitness, your health, and your finances, your family. Just keep going. Whatever's good, I want to bring that to you. And I disagree with a lot of the financial planners. Matter of fact, a very special friend of mine, I told her to go into Charles Schwab a few days ago, and I said, if you want to do partly what I'm doing with a small portion of your assets, go into Schwab, sign up for an account, and I'll show you some initial steps, and you can use your own mind to make your decisions based on the information that you're gathering from me. She went into Charles Schwab, a firm where I am invested, in terms of I'm an account holder. One of my accounts held at Charles Schwab. The company's done very well over time. And I know what financial planning teaches people who work at Charles Schwab and other institutions. She went in there, and the Charles Schwab representative said, you don't want to do anything. You want to stay in all of your investments. This market's way down. You don't want to sell out right now because you'll miss the rebound when it bounces back. As if the rebound's going to happen all in one day. As if during a coronavirus worldwide pandemic where people are out of work, where they're quarantined, where they're not allowed to travel, where there's crises galore, there's people that are getting sick, there's horrific news on the media. You've got Trump saying we're going to win, we're going to kill this thing, we're going to beat it, like it's a war we can win. I hope we can, but you can't say that if you're a president. You know the stakes are very bad. Viruses are very challenging to combat. And this is a virulent situation, virulent virus. So this financial person's talking about the bounce back and, the financial markets and buying for the long term. You think Warren Buffett was in cash because he was buying with all of his assets for the long term? No, he was in cash because he knew that we were going to have a correction, and he wanted to be ready for that correction and not have all his eggs going down 20 or 30 or more percent in a very short time. And other people, if you know wealthy people who know markets and they've been around for a period of time, 20, 30, 40, 50, 70 years, whatever, they've been through these downturns before, and many times they can call these downturns before they happen, which is what I did starting 14 months ago, moving into money markets and short-term bonds, which when the federal government in America and the Fed continued to lower interest rates, my short-term bonds went up. So I was even making money by being conservative. How do you like that? So I asked my friend to put me on a speakerphone and actually speak with a Schwab person. I said, ma'am, I completely understand you're looking at a long-term financial horizon. I understand what you're saying this, and I will shush if you can answer this one question. Is that a deal? And she said, yes, that's a deal. I said, it's a basic question about the financial markets that you should know. And if you don't know, I'm going to ask you to cease and desist on the advice and to shush and let me help my friend open an account there and help her with a small portion of her assets and make money on those assets or attempt to make money. So I said, here's the question. The financial crisis of 1929 that kicked off the Great Depression. The stock market collapses in 1929. It hits its lowest point in 1932. How long from 1932 did it take the stock market to its value? So it was going up. Now in 1929, down. 1932, the lowest it had been at that crisis point. How long did it take for that graph to even out over time? If you can answer that, I'll shush. And she said 5 years. And I said, ma'am, it was not 5 years. It was about 22 years. The year was 1954. She got all angry and said, no, it was 5 years. I know these things. I said, ma'am, this is what I study. And I study these things on a regular basis. I've been a student of history, sociology, and many other things for a long time. This is what I study. I'm telling you, it's 1954. And I'm not talking about time value of money, all these other things. I'm just talking the dollar amount of the Dow from 1932. It took it till 1954 to level, gain back the level it had lost. That's 22 years. I'm not saying that was going to happen during the coronavirus. I'm just saying that the bounce back that this woman's talking about and missing it is a low order of concentration for me. I definitely want to be there for the bounce back, but I'm not thinking that it's going to bounce back in a half a day or a day. I'm going to think that things will find a bottom, and news will start to improve. People will slowly move back into the market. And this is probably after a real estate correction also. And, unemployment right now is extremely high. People are out of work. And this is just less than 2 weeks after the pandemic hit. So all those things have to work themselves out. People start having to feel good about spending money, jobs, finances, retirement accounts, all these things. And the Fed has to come back to realistic interest rates. You can't keep interest rates at 0% like they are now for an extended period of time and have a healthy economy. So this woman did not agree. My friend picked up the phone and she said, "I'll talk to you later." Amazing. But this is the kind of stuff I deal with every day. People don't understand it and they don't like to be corrected. Now, if you're that type of person that you don't want to be corrected and you don't want to open your mind and your heart to some thinking that takes geopolitics and mixes in economics, history, your own personal finances, your risk tolerances, all these things, then I can't help you. But if you're ready to let down your guard, to open your mind, and to learn what it's taken me a long time of study to learn, then I'd be happy to share my thoughts so that you can make your own personal decisions in a way that suits your risk tolerances and your psychological proclivities, because that's also important. If you can't handle stress and you're trying to make money in the stock market, especially short term, then this is not something for you. You have to get beyond that. You have to live aloha, as they say in Hawaii, and be calm and be prudent at the same time. So I am Henry Sifu Slim Kreuter. One of my websites is sedentarynation.com. And I ask you for your business, and I hope I can help you. I'll give you one quick response that I gave somebody that sent me an article from the New York Times. One of my coachees, I'm a coach, they're the coachee. New York Times article, March 18th. It says, 2020, General Motors, Ford, Fiat, Chrysler factories, and the virus, bad news. So the question was, these stocks will go down, right? And my response on the 19th of March, which is today, it's not as simple as that. The market is not always affected by reality. Perceptions of investors are different than financial numbers. So remember that. You can look at financial numbers and that may be helpful, but the perception of the investors is not always related to those financial numbers. The news may already be reflected in the price of Fiat and Chrysler and General Motors. So remember that. The stock price, the price of the mutual fund, all that bad news may already be reflected in the price. If there's a planned government bailout to help certain companies, that can affect the price. Any news today in the future could affect these stocks in either direction. You have to know that going in. So those are just some quick tips. Hope this helps. And I hope you keep in mind some of these things which are important to know. And there's the nuanced art. So the nuanced art is that you have to consider this stuff like an artist who knows you can't keep going with this painting, right? You can't keep going. You might do a sketch before you do it, and you might chip away on that for a few hours one day, a few hours on the next, and then eventually you're going to complete that painting. You sign it, and then you might frame it or sell it. And so that's the thing. Investments is an art form. It's not something that the more you do, the better you'll become at it. It's not like that. You have to see it as an art. So you're gaining a talent, but you don't want to bombard yourself with too much minutia, too much information. So there's the tip for today. And I hope you'll consider passing this on to other people that may be interested in this type of coaching, so you can make your best decisions and not be subject to these huge downturns in your 401k, in your financial portfolio, and maybe even make some gains in the process. So I'm Henry Sifu Slim Kreuter, Henry Sifu Slim Kreuter, wishing you all the best in your health, happiness, wellness, and financial wellness. Aloha.